The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Tuesday, the 3rd of November 2020. On the podcast today, Nathan Rayner, Operations Director at Bahamas Petroleum Company, provides an operational update in relation to its assets in Trinidad and Tobago and Suriname. Also on the podcast, Kiran Morzaria, CEO of Cadence Minerals, gives an update on the bank creditor settlement and operational progress on its Amapá Iron Ore Project in Brazil. Plus, Glen Goodman, former ITV News Business correspondent and now the author of The Crypto Trader, covers this week's Bitcoin, blockchain and cryptocurrency news. And as always, at the end of the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours and the top 5 most liked RNSs too. By the way, you can see top 10 versions of both these lists at voxmarkets.co.uk, where you'll see lots of other content. In fact, there's an article there on InSpirit Energy. There's one there on AFC Energy. What else there? Alba completes its underground exploration phase. There's a video there on first day of dealings with Source Bio. Where else was there? There's another video there I saw on another IPO. Verici DX. I hope I'm saying that correctly. VRCI. There's a video and article there. See, Paul Hill interviews CEO Sarah Barrington. Worth checking that out there at voxmarkets.co.uk. And, of course, our COVID-19 index on the front page there. Biggest rise of it today is Synergen, up 6.5% to 174.7. Biggest fall is Biotrol, down 6% to 6.9 pence. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Nathan Rayner, Operations Director of Bahamas Petroleum Company. BPC is the ticker there. Nathan, thanks for joining me.
Thank you, it's my pleasure.
Now, you've just released an operational update, Trinidad and Tobago and Suriname, and we'll dig into details around that in a bit. Before we do, Nathan, for people maybe have never heard of Bahamas Petroleum or know about it but not that familiar with it, just give us a brief summary as to what Bahamas is all about, please.
Yes, of course. Bahamas Petroleum, BPC, is a international oil and gas company that spans the full spectrum of exploration to production assets. We have a particular focus on the Atlantic margin, and in that area we already have our flagship Perseverance 1 well that we're planning to drill in December, a material prospect that we have there, and we have production in our Trinidad and Tobago operations, and we're expanding our operations into nearby Suriname and further exploration opportunities in Uruguay as well. So we are looking for opportunities that are both large in scale, and then we deploy our technical expertise in order to unlock those potentials, through the production techniques all the way through the exploration and development.
Mm-hmm. Marvellous stuff. Okay, let's talk about the update here. It's nearly 3 months into the merger with Columbus. So how have you prioritised your activities and what are the major highlights for Trinidad, Nathan?
Yeah, thanks. Look, we've done exactly what we do, and that is to go in, use our scientific background, our technology understanding, and we focus on collecting the right information. We study it, and then we utilise it to make the best decisions possible. And this is what we've done in Trinidad already. We've taken this bottom-up approach to all of our activities, from looking at the 3D seismic that has already been acquired and sending that off for reprocessing. We've looked at all the wells and production data, looked at where we can improve our production potential, all the reservoir performance data, the pressure data, and looked at how we can enhance the recovery of all of our fields. So we've taken the large historical data that we've got, we've analysed it, and we've looked at every single field at ways that we can do it better. In terms of highlights, we are seeing improvements in baseline production through increased wells online, workover frequency and new designs. This has helped us to arrest the production decline and taking the necessary steps to achieve our 2020 goal of 500 barrels of oil per day. We have received all the necessary approvals for Phase 3 of our CO2 pilot in its Trinity with our joint venture partners Predator. We are looking forward to seeing the enhanced production rates in the coming week. And thirdly, we are rapidly advancing our plans for the drilling of the Saffron 2 well.
Mm-hmm. Okay, and you've got a sort of immediate target of 500 barrels of oil per day. How do you plan to achieve that then?
Yeah, look, we for the last 3 months, we've already increased our workover frequency rate by 20%. It means we're all undertaking 20% more workovers any given week or month than we were in the first half of the year. This has allowed us to maintain and improve the number of wells that we have online, and we will continue to do this over the next few months. But we're also looking at different incremental projects as well. These are projects that will enhance our flow from each well. In order to do this, we have contracted a third rig for a minimum of 3 months that will increase our activities. These projects will accessing new oil, either through adding perforations or removing damage from the wells so that they can flow better. As a result, this should provide us impetus to move past the 500 barrel a day target, which is an important milestone for us, even at a modest $40 oil price, because we are able to achieve an operating break-even. And once we're above this, either through further production growth or increase in oil price, we generate surplus cash flow for the benefit of the BPC group.
Excellent stuff. And with respect to Saffron 2, can you give us a bit more detail on that, Nathan?
Yeah. Yes, of course. So earlier in the year, the group drilled the Saffron discovery. This particular discovery uncovered a potential for up to 10 million barrels of recoverable, which is equivalent to producing about 2,000 barrels of oil every day for 10 years. The initial well, Saffron 1, was drilled to 4,500 feet and counted oil at each of the target levels, including the middle and the lower cruise. The Saffron 2 well, which is now scheduled for Q1 next year, will target these same locations, but specifically in a location to get at a thicker oil interval. The well's been designed to be brought online immediately following its drill and will provide the information necessary to progress to field development in the second half of 2021. In the full development of the Saffron field, we believe that there's potential for in excess 20 wells, which will significantly contribute to our 2021 targets of 2,500 barrels a day, or five-fold increase from where we are today.
Yeah, okay. And there's a lot of talk about the sort of growing oil industry in Suriname. Can you explain the activities you have going on there, Nathan?
Yeah, we've had a long interest in Suriname through previous companies that various members of our management have worked in, and also a watching brief as BPC, and it's very encouraging to see what's happening in Suriname with the offshore discoveries. And so the inclusion of Suriname into the BPC portfolio was seen as a natural fit to our experience as offshore explorers, but also as our experience as onshore producers, as we do in Trinidad. So since we've merged with Columbus, we've been able to collate the large existing database we have on our Big Nazi licence onshore Suriname. We've then undertaken petrophysical and reservoir studies to confirm the potential of the wells that are in the field and the reservoirs and the oil potential. We've then done the drilling, extended well test and environmental management plans that are required to kick off that project. They've all been submitted to the relevant authorities for approval, and it's our expectation that we'll be able to drill in Q1 next year and begin the extended well test shortly thereafter, allowing us to fully appraise the potential of that particular asset that we have, and we're very excited about that.
Excellent stuff. Okay. If you could, Nathan, every day in the podcast, I highlight the top 5 most followed companies on Vox Markets in the last 24 hours. So for someone to do that, obviously get on the list, people need to hit that follow button. So give us 3 quick reasons why someone should hit that follow button and add Bahamas Petroleum to their watch list, please.
Look, it's very exciting to be a part of BPC at this time, and with particular focus today on Trinidad and how we're growing there and growing into Suriname. That is definitely something to watch, but the Perseverance 1 well is going to be a major milestone for the company. We've been working on the Bahamas exploration potential for quite a number of years now, and that is going to really be a milestone event for the company. So that's on track to be drilled in mid-December, and we're really looking forward to that. That's not to minimise the importance of what's going on Trinidad at the moment. You'll be able to watch us hit our targets this week. We've set ourselves very clear targets around producing 500 barrels a day, which we will do before the end of the year, and watching that grow next year. And we will also in the coming month be delivering our first CPR, so you can watch us grow our reserves over that time too. And then the third and key thing we're going to do is we're going to actually go and do what we say we're going to do, and that's to go and drill our wells in Suriname and our well in Saffron 2 well, which will set us up for significant growth in terms of production and in revenue in 2021.
Excellent stuff. Nathan, good to chat to you, and hopefully we'll catch up in the not-too-distant future. Thank you very much.
My pleasure. Thank you for your time.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Kiran Morzaria, CEO of Cadence Minerals. KDNC is the ticker there. Kiran, thanks for joining me.
A pleasure as always, Justin.
Yeah, you had a busy day yesterday. 3 RNSs come out, so we're going to tackle 2 of those. A general operations update, and also you've updated the mineral resource of the Amapá Iron Ore Project there. So before we get into all that, Kiran, I know different parts of the business, so just summarise, if you could, Cadence Minerals for people not familiar.
Yeah, absolutely, Justin. So Cadence is an investment company investing in the primary asset at the moment is the iron ore asset in Amapá, Brazil, and it also has other investments in the lithium and rare earth sector, which are all sort of critical elements in fueling the electrification of vehicles and electrification of and new energy mix.
Yeah. And I think, like I said, you said the Amapá Iron Ore Project there, that's got the potential to transform the company's valuation. So let's deal with that, because you did an update yesterday. So first of all, let's go into the bank creditor settlement. What's happening there, if you could, Kiran?
Yeah, as we announced a couple of months ago, we'd reached in principle settlement with the banks. So this was a critical point in us being able to progress and make our investment into the Amapá project, because in the absence of that bank settlement, we were unable to effectively complete or execute the judicial recovery process and therefore release our money, which we've already got in escrow of $2.5 million, which then vests our 20%. Mm-hmm. So we announced that a couple of months ago. And at this point in time, they're just going through the drafting of the legal documentation so that we can execute that as soon as possible. I would say it's taken a bit longer than expected. You've got to understand that we're dealing with the 3 different banks with 3 different corporate cultures across 2 countries, and one of the banks are parastatal. So they take time. They've got more administrative process, and they're not as quick on their feet to make decisions just because of whom they are, and relatively this sort of loan is a very small amount comparative to the rest of their non-performing loan book. So it's just taking a bit more time, but we've got an agreement in principle. We just need to go through and execute the final document. So once that's done, we get into our 20%, and we then have 20% of the Amapá project. And as you said, there's real potential transformation project for Cadence. Yeah,
absolutely. Okay, like you say, things always take a bit longer than expected. I mean, like I said, before this year, no one planned for COVID, but that's happened. Look, upset the plan. So, okay, so let's go into the operations then, and also the updated mineral resource, if you could, Kiran.
Yeah, and so yes, that's really important, because actually, despite typically you would actually get the bank's secured creditors done first, and then you start these operations. But we're confident in achieving that goal. So we've already started investing time, effort, and money in terms of the operations and the mineral resource estimate. Now, in terms of operations, what have we been really focusing on? I think the most important thing that we've done, we already carried out a desktop study and a high-level review of the Amapá project, which was part and parcel of our investment to make our investment. Now we're doing a scoping study. Now, this scoping study provides basically an accuracy about 40% or thereabouts onto all the economics around the project. Now, you need to do further work. So what we've done is updated the mineral resource estimate, which we can talk about in a second. And we're now in the process of that mineral resource estimate gets put into what I call a mine schedule. So we then start to understand on a month-by-month basis, on an NPV basis, what is our revenue per block of iron ore that we're mining or we plan to mine. And we're also going to be COVID travel restrictions, COVID travel restrictions dependent. Do what they call effectively a conditioning engineering plant on the beneficiation plant, and a tailing storage facility review. So those are really the three outstanding items on the scoping study. And once that's done, we are ready to publish that. That's really something great to look forward to, and we anticipate we'll be able to do that after we've got the bank settlements with the credit settlement with the bank creditors finalised and executed. So that's really the operation work that we're doing right now on the scoping studies, and that's really important, then leading to the bankable feasibility study, which then leads to commissioning. In addition to that, what we're doing as well on the ground is that Dev Mineração, the operating company, has already started interacting with the relevant regulatory authorities, particularly the ANM, which is the mining authority in Brazil. And we're doing that because that is what's required. So for Cadence's next tranche of investment, all the operating licenses have had to be granted. So Dev is already starting that process, engaging with A&M, bringing those mining licenses in, regularising those mining licenses, which then leads to all the operational licenses being granted, subject to reporting, etc., etc. So that's really important. That's starting work that would normally start sequentially after the bank settlement, and doing that early, so we can start hopefully shortening timelines. Yeah. And then the other thing is that, as we know, the next things after bank settlement is that we're going to be shipping iron ore. And that iron ore from the stockpile, about 1.3 million tons, is a critical attraction to this story because it generates revenue, which means technically our subsidiary, our investment is profitable as soon as we have, in the year that we take our ownership. So one of the things that we're wanting to do is to try and take advantage of these higher iron ore prices, which is result of sort of China's stimulus at the moment as a result of COVID. And what we're doing is that we're looking at additional capacity, whether it be at our port or elsewhere, to supplement the public port capacity so that we can ship the iron ore that's at stockpile at a faster rate. Thereby crystallising value quicker in that iron ore stockpile. So as you can see, it's really quite busy there operationally, despite maybe the bank settlement taking a bit longer than expected.
Yeah, absolutely. So, like I say, there's lots going on there, but to you, in your mind, what's the next sort of critical milestone you're hoping to achieve, Kiran, that'll move this on?
Well, for us, as we just said, bank creditors is an immediate critical milestone. Shipping of the iron ore is the next one. Then embarking on all the studies that are required to bring this to recommissioning, and also getting all the licenses and operational licenses. So basically, what we're trying to envisage, and the plan still remains the case, is from around. From the shipping of the first iron ore stockpile to recommissioning, including all the recommissioning of the equipment and refurbishment of the equipment, is around 18 to 24 months. So, and then at that point, we will be, mining new material on what is now, we've increased the mineral resource by about 20% from when Anglo had it in 2012. So utilising that mineral resource of 176 million tonnes to have a mine life of 13 to 14 years. And given the cost structure or envisaged cost structure of this asset, be highly profitable during those 13 to 14 years. Yeah. So we have a plan all the way out to end of mine life as we stand, but the near term over the next year is all going to be, or the coming year, it's all about shipping the iron ore stockpile, being profitable during that period. Studies update, PFSs. So there's a lot of work going on, and subject to everything coming off, it's going to be certainly this is a potential to add great value to Cadence. Yeah,
absolutely. And on a personal level, Kiran, of course, still lots of things to do there, but how are you feeling about it?
Personally, well, I've always felt bullish about it since we started looking at this in 2000 and it now seems a while, but late 2018. I've been bullish, but it's always important to have a realistic head on your shoulders. So we do have devil's advocates on the board, always trying to find potential holes and how we can improve things. But yes, I feel bullish about it because I can see value within there just because it was in administration. People didn't see that administration process. My history of working in Brazil, I could maybe understand that a bit better, understand the language, understand what needed to be done, and understand that, yes, it can be a protracted legal process, but ultimately the value, it lies within the asset and the system, which is a port, railway and mine with a substantial resource which just needed recommissioning, rather than finding something from scratch and all the risks associated with that. So I've been positive because I could see past this fog of war or fog of legal issues, but once you're past that, it is an engineering solution, and I could see value through that engineering solution.
Yeah, marvellous stuff. Okay, Kiran, as always then, for people listening, letting the sound of what you're doing here, the progress you're making, but are not yet following the story, just give them those 3 quick reasons why they should hit that follow button on your page on Vox and add Cadence Minerals to their watch list, please.
Yeah, absolutely. So Cadence Minerals is an investment company, and the 3 things that are important about it: it's involved in the iron ore asset of Amapá, which we just highlighted the potential values there that exist there. That's commodity, and secondly, it's involved in the iron ore commodity. Now, the iron ore commodity at the moment, and for the foreseeable future, is in a really positive state. It's on it's got very high value, and that's because of the stimulus that has been injected by China into its infrastructure. So therefore, steel and iron ore in high demand, which is great for this asset. And lastly, let's not forget about all our other assets, which we have European Metals Holdings, we have JV stakes in Bacanora and Hastings Technology Metals, which are all part and parcel of the suite of metals and minerals that make up the electrification of vehicles and battery storage, which are critical new elements in, let's call it, the new energy economy. So those are the 3 key reasons to follow Cadence Minerals.
Excellent stuff. Kiran, good to chat to you as always, and like I said, lots going on. So hopefully we'll catch up in the not too distant future. Thank you very much.
Thank you, as always, Justin.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is dirty trader Glen Goodman, otherwise known as the crypto trader. He's got a book out called The Crypto Comes, and it's about that. It's about his life, his loves, his losses, all that stuff. But it's not in back. Do you cover any losses in the book, Glen?
Yeah, I do.
The one loss you've had in your life, yeah?
Pretty open about that.
The one loss you've had in your life?
Just that one, yeah. It was an early lesson. It happened in the year.
You've made other losses, surely. Otherwise, I'm not believing you now. Your credibility is blown.
Yeah, right. Yes, I was just playing along with your nonsense. Yes,
Nonsense?
Of course, I've had many losses.
That's high quality content.
It's viral.
Yeah.
Viral content. I've had many losses, obviously, but I talk about the most significant ones, the ones that had the biggest impact on me and spurred me on to greatness. Through lessons that I learned from those terrible losses early on. The main loss being, don't hold on to something in the desperate hope that it will go back up as it falls and falls and falls, and your small loss becomes a big loss, and your big loss becomes a complete loss. See,
our strategies are almost formed by our early days, and sometimes, so I know people who've blown up their accounts and they've kept at it, and what they've done is because they become a trader essentially, because they don't trust the stocks they hold, and some of them don't want it. They're dirty, lazy traders. They don't want to do enough research to understand the main risks of holding a stock, so they jump in and out, and as a result they don't get big returns because they're only doing 10, 20, 30%, whatever. They never get multi-bags because they're scared to hold on because they're scarred by that early lesson of blowing up their account. Well, I think, in fact, rather than just change the landscape a little bit and the approach, they use the same approach but just jump in and out quicker. You know, I think that's
I mean, it's a tricky one. I mean, the two main lessons in my book, the ones that I repeat over and over again, are really, Wall Street ancient law, which are cut your losses before a small loss turns into a big loss, but also run your profits, as in don't sell too early because you want to lock in a nice little profit. The problem with that, obviously, as you say, is that you will never get the home runs. So there's a difficult balance to be struck there. And as you quite rightly point out, a lot of people are scarred by the big losses, so they're able to learn that lesson relatively early on, that they shouldn't allow a massive loss to develop, particularly if they've invested too much of their capital in that one share. But then the other lesson, the other way around, is harder to learn, because of course the only way you can learn it is by, over a long period, realizing that you're not really making profits, or if you are, they're very small, because you keep selling before you give yourself a chance to make a decent profit. That's not an easy lesson to learn, and really it can only come from looking at the things that you've sold too early, looking at their charts, say 6 months, a year down the line, and going, oh my God, I could have made so much money if only I'd held on to that. And most people don't do that. They don't do that kind of post-match analysis of their trades and look and see what would have happened. But it is important to do that in order to learn that valuable lesson.
First of all, it's easy. I mean, to sum up investing in a sentence is very hard, of course. But I agree with, cut your losses and stick with your winners. But I've had, when you initially invest in a company, you can't hope to be in profit straight away. That's the trouble, I mean, if people start cutting losses there and then, and the story hasn't changed, and the reason why you invest in the company hasn't changed, then you shouldn't just cut the loss, And of course, if it starts to go down below a certain level, then there's something wrong. Maybe you should cut loss, but you should have, like you said, a bit of patience, because I normally scale into companies, so I'm expecting the share price to come down a little bit, and if I look at the story hasn't changed, then I'll invest a bit more, because I'm happy that I'm just getting the shares cheaper, and the upside can be bigger, because essentially if you've got a company that say it's going to be generating 100 million in cash flow in the next 5 years, starting next year because it's starting producing something or whatever, and the share price dips in the short term, that's fine. That means their market cap has gone down, and so the value generation, the multiple has gone up. So they can actually the investment case becomes stronger. So where do you draw the line of losses? At what point? Now, if you're a trader, of course, you cut losses. If you're an investor, that's going to happen. You're going to have a bit of volatility in the share price. You're going to sit on a loss for a little bit, maybe.
Well, you say that the story hasn't changed, but as you know, the problem with that, of course, is that quite often the story has changed, and it's just you don't know about it yet. You don't know it's changed because you don't work for the company. You're not the CEO and all the rest of it. So quite often the share price will start falling because insiders are selling.
Yeah, but no, you don't. Yeah, I mean, if you got a massive selling off, there's something wrong.
Even if it starts slowly, because
I disagree. On big companies, maybe not on small companies. On big companies, if it starts dropping at 10%, 20%, there's something wrong there, definitely. But small companies, as long as the story is still ticking along nicely, they shouldn't be worried about a bit of volatility. Honestly, in the time I've been investing, but one company goes through on me, and I'm invested in hundreds of companies. I've had a couple of big drawdowns of companies, of course, but largely they bounce back. So if you have a certain, I've had a quality filter system I go through. They have to tick a lot of these boxes, and the biggest risk of small companies essentially is, have they got the cash? If they're not, producing, a lot of companies I invest in are at the inflection point of about to be generating cash. At the moment, they're loss making. So, have they got the cash to get them to that, cash generation period? If they haven't, then that's a big risk, because they have to raise money somehow, and that will dilute shareholders and maybe at a discount. So that may knock the share price. So that's one reason why you never invest in a company who's looking for cash or need cash. Another thing I look at is the share price spiked recently. Don't chase spikes. That's another thing. But apart from that, generally, I mean, you can avoid risky sort of areas like oil and gas explorers and all that stuff. That's just gambling. Or companies going through clinical phase trials. That's gambling as well. So anyway. I
mean, I take your point, but how far would you? Because you alluded to it yourself that if it really starts falling seriously, then there's probably something wrong. So how much would you allow a share to fall before you thought this has fallen too far?
Yes.
I mean, after you've bought it.
I've never. If a company starts falling by over 20%, I start to get a bit worried about it. And then I say, what's going on here? But again, that's why I'd scale in.
Fair enough.
And that's why I'd scale in.
I mean, I don't allow that much of a margin. I tend to cap it at around 10%. But even so, yeah, I still allow small losses. I just don't allow large losses because they're the ones that will ruin your account eventually. But small losses, as long as you don't have too many of them, you can get away with. And anything up to 10%, well, it depends on the share and how volatile the share is. But it's not unusual for me to allow myself to get a 5 or 10% loss after I've bought something. Yeah. I don't just expect it to start rising straight away. Though, quite often, unfortunately, the ones that start rising straight away turn out to be the real winners. The ones that rise and then people go, oh, it's risen too far to buy, but I'm going to buy it on a pullback. And then it just doesn't pull back because it's got that much buying power behind it. Quite often, those are the biggest winners, and they're the ones that most people miss out on because they just take off and then just never come back.
Yeah.
Well, not for a long time anyway.
Yeah, exactly. Okay, what's happening on Bitcoin?
Bitcoin is doing really well, actually. It's doing exactly what I've just alluded to, which is it took off. And everybody in the Bitcoin community on Twitter are going, oh, it's going to pull back. And when it pulls back, I'm going to buy more. And so far, it's just refusing to pull back. It's been refusing for a couple of weeks. It keeps kind of just grinding its way slowly upwards. It's now at, as we speak, 13,500. Though a few days ago, it actually peaked, around 14,000. Where was the highest point? 14,100. About 14,100. So basically, it did what we were talking about last week, or what we were hoping it would do, which is it beat the high of 2019. Only just. It beat it by just like a few dollars, but it got there before falling back a tiny bit. So, I don't want to go, it's a new bull market, because it wasn't a very convincing break above the 2019 high, but nonetheless, we're right up there now. And if you look at the chart of Bitcoin, as I always suggest people do, on a daily or even a weekly chart, so that you can get the long-term perspective, it really doesn't look too bad at all. It looks like that bear market that we were in for 2 years has almost certainly ended. I say almost certainly because, as I say, we haven't convincingly broken that 2019 high yet. But if/when we do break that, say we get to about 14,500 or even 15,000, then I think we can safely say bear market is behind us now.
Mm-hmm. Yeah.
Does that make sense to you? Do you agree with that?
Yeah. Now, interesting. You reckon Biden's going to win? You said last week Biden's going to win the election. Yeah.
I've kind of changed my mind a bit.
I know. I know what you think. I know exactly. It is going that way. People don't know, do they?
It's just I just hear so many. So, I don't know, it's all anecdotal though, isn't it? But certainly there's a lot of doubt that we can cast over the polls for a start, for all kinds of different reasons. I've been reading loads about the problems with the polling methodologies, so I don't really trust the polls all saying that Biden...
Have the polls ever been right? That's what I'm thinking. Have they ever been right? And so, we know
the past they were right. I'd say 20 years ago they were quite
exactly. But now, even on the biggest, sort of debates, sort of votes we've had, like recent times, Brexit, Trump previously, and even was it this? The polling recently on one of our general elections was absolutely wrong. So what do they do? I don't understand.
Well, what I have found out recently that was really interesting is that in the past, because polling was always done, just through landline phone calls, nearly everybody would say what they were going to vote when people phone them up. They just say, yeah, I'm going to vote for this person or that person. There was a very high response rate, in other words. Now, the response rate is absolutely tiny. It's something like 2% of people who are approached tell you the answer that you're expecting. So, basically, it's because landlines are no longer, the be-all and end-all. So, polling companies try and contact people by a variety of different methods now. Some of them online, some of them through text messages, that kind of thing. But the one thing all these methods tend to have in common is that they can't corner you and just go, who are you going to vote for? And you have to give an answer. Usually they're just like an email or a text or something that you can ignore. And so what happens is you end up having real difficulties trying to get a representative sample of the population, because you tend to end up with, according to articles I've read, a very large amount of young college-educated women responding to these things and saying, yes, I'm going to vote Biden. But you get very few working-class white men responding. They don't tend to respond for some reason. So you end up with a very skewed result. And then, of course, the polling companies have to try and do various checks and balances to account for that skewing and to make it look more representative. But how successful are they? Who knows?
I think you've got two people out there in America, right? You've got the people who will vote for Trump and will say they vote for Trump, and the people who don't want to vote for Biden. Sorry, the people who vote for Trump and the people who don't want to vote for Trump. Simple as that. And now that is not people voting for Biden. It's people not wanting to vote for Trump. So you've got the people who will say also who realise that Biden will not be good for the economy. So they probably vote for Trump but won't admit it because they don't like Trump as a person, but realise he'll do better for the economy probably than Biden will. So they won't admit it, like you said there. The people who are proud to say they vote for Trump, it's not the masses. So the polling is wrong. I mean, there are lots of people. Do you know what? If I had a vote now in America, I think I don't like Trump, what he stands for. He's rude to people. He's just generally unpresidential. But will he mess up the economy or stock market? I don't think he will, as much as Biden will. So I'm probably, on balance, when I vote for a guy, Biden, who's probably going to die before the second term, and is questionable mental health, or I vote for Trump, who I hate, but I'm an investor, and he cares about the stock market. I'm going for Trump. But I won't admit to that.
He does love that market.
I won't admit to that, though. You vote for Trump. I'm not a Trump supporter in any way whatsoever, but the alternative is not good. Is it, really? On a lot of levels. If they put someone in there viable...
It's interesting. Like you, I hate Trump. I can't stand Trump. I like to think that I would never, ever vote for Trump. And yet... I saw a Facebook post from a friend of mine yesterday where she had a picture of a young Hillary Clinton with Chelsea, and she wrote, in a parallel universe somewhere, we're all donning our pantsuits in support of electing Hillary for a second term today. And there were all these, heart emojis from her friends. Yeah, love this, love this. And I thought to myself, do I love this though? Because the thing about the parallel universe is that my friend there is just assuming everything's been wonderful for the past 4 years under a Hillary government. Whereas I'm thinking there's a damn good chance that America would be at war, desperately sort of entrenched in horrible wars in the Middle East, ones that perhaps we can't even imagine because they've never happened, apart from in this parallel universe. Or maybe they're at war with Russia. It's like... Hillary was not scared of war. That's one thing you could say about her. Whereas the one big positive I think about Donald Trump so far is that he hasn't started any major wars. And that's pretty unusual for a US president. Let's not forget that. Obama, at least, he didn't start big new wars. He was slowly getting America out of the wars. And Trump has kind of continued that. Would Hillary have done that? I don't know. I think that's the thing. You can't just assume the world would have been a better place if Hillary had been elected, however unpleasant a human being Donald Trump is.
Yeah. Exactly. You can't. You can't. I mean, the alternative, like you said, you can't forecast that. But apart from this, if you ignore him on Twitter, right, and you're not on Twitter, and and pretty much you understand he's messed up on coronavirus. But again, this is a once in a generational thing that most leaders will never have to deal with. And most governments have messed up on coronavirus. So our government, they're changing their minds day to day. It's ridiculous. Then you think, okay, has he improved the life of American? Has anyone's life? I mean, and you also ignore the fact that he's, he hasn't united America. He's divided America, which is not a good thing. And that's one thing Biden said that I agree with. I think no American president has tried to divide America previously. They tried to bring them together, Then if it's strictly down to literally, the the market investments and the economy, then Trump wins, doesn't he?
Well, Biden is already talking about, making it so difficult for oil and gas companies to operate, particularly fracking companies, that, he hasn't exactly said it, but we all know he's going to decimate those industries by massively subsidizing green technologies and massively penalizing fracking and other oil-based technologies. What else would he do to the economy? Well, the thing about Trump is that he's always talked about trying to bring jobs back from China. If there is one root cause for the phenomenon of Donald Trump and the split that there is in America at the moment, there are lots of reasons, obviously, but I'd say the main reason has to be the deindustrialization that came about as a result of globalization, the hollowing out of all the jobs in the Rust Belt, all those factories closing over a period of decades. And it made a lot of people extremely jaded, quite rightly so, that globalization had been touted as this wonderful thing that was going to make everybody much richer and happier. And of course, it only enriched some, the people in the coastal states, the people in New York and the people in California. And everybody in the middle got screwed, and they're annoyed about it, and they voted in Trump. And to his credit, he has gone a little way towards trying to get those jobs back. I wouldn't say he's done a great deal, but he has tried to confront the imbalance in the sort of trade situation with China and to try and bring some of those jobs back. Has he brought many of those jobs back? Probably not, but he is at least making an effort, whereas you can't honestly say that Biden really cares that much about that situation. And would he, it would just be back to the old ways of doing things. That's what worries me about a Biden victory, I think, more than anything else, even though I think he'll be fine and he'll just kind of, we're not going to get any massive surprises with him, which is probably a good thing at this point in time. At the same time, it'll just be back to business as usual. And business as usual means continuing to hollow out the American economy over the long term, continue to globalize. And so we may get even bigger problems further down the line. There may be an Uber Trump, somebody even worse than Trump in 4-8 years' time, as a sort of indirect result of the policies that Biden continues, the deindustrialization.
Right. All right, crypto. Any news?
You don't get any reaction to that analysis?
I stopped listening halfway through, to be honest. Yeah. To be honest, I'm just thinking it's very simple, really. You understand what Trump should stand for. He should shut his mouth on everything else apart from the economy, and even parts of that is questionable because he's not about clean, green, future, environmental safe industries. He should just say, I want to get more jobs, stock market will go up. That's it. Because you realise he's a separatist, he's, like I said, he's, in so many ways he's wrong. But the alternative...
Biden's not going to destroy the economy, is he? He's not like a crazy hard lefty.
No, I know, but the alternative, but the alternative is, but they're talking about raising taxes on all this stuff, so people don't know, do they, what he's going to do. Anyway, Bitcoin, any news, he was talking about that share price, any news, on the movement of blockchain?
Yeah, well, there's a piece of news that is worth mentioning, which is that Iran has changed its law. It's actually changed the law to allow Bitcoin to be used for imports. Iran has become the first country in the world to use cryptocurrencies at a state level for imports and exports. And that is because, and it's kind of a warning shot across America's bows, because it's because the country is in the grip of US sanctions. Obviously, they can't use dollars for international trade, and they're therefore turning to Bitcoin. And this is interesting because, of course, this is one of the reasons Bitcoin came into existence in the first place, was because of the power of the dollar as the world's reserve currency, and the fact that the dollar can be used to leverage power over the rest of the world. Which is exactly what they've been doing with Iran. So Iran is now saying, well, screw you. There's this new thing called Bitcoin, and we can buy and sell from our competitors and our colleagues in other countries using this Bitcoin currency instead. It's not that difficult. Every country has the wherewithal to transfer their fiat currency into Bitcoin, then send it over to Iran in exchange for oil or whatever else, and then the Iranians turn their Bitcoin back into their own native currency. It's not a difficult operation, and it circumvents the entire global financial system, which is a pretty big advantage, really.
Yeah, and the thing is, if they start using Bitcoin, and they get around this trade problem with America, then it'll give America even more reason to clamp down on Bitcoin, cryptocurrency, won't it?
There is that worry, yes. Though in what they're doing instead is getting more and more involved in the idea of the central bank digital currency. They're jumping on that bandwagon. Europe are now talking a lot more about it as well. And we know that China is in latter stages of its testing now. As I said last week, it's handed out actual money to thousands of people to get them to put into digital wallets and spend, just see how it all works and everything. We're getting in very close to that world now, where every country has its own digitized version of its original currency, and that will cause the whole global financial system to be upended anyway. So, really, it comes down, as you say, to that question of if Bitcoin becomes powerful enough, then I think you're right. I think the US regulators will clamp down on it. But if it's just being used here and there, God, you've brought up a real dilemma there, Justin. Because the problem is, on one hand, I'm thinking, well, I'd like to see more countries like Iran, but preferably better ones than Iran, using cryptocurrencies because it helps the whole sector to develop. And yet, as you quite rightly say, if these cryptocurrencies like Bitcoin start putting their head too far above the parapet, America might just shoot that head off.
Mm-hmm. Yeah, exactly. I can't argue that. So what are you saying? Anyway, one word answer. No, nothing else. Who's going to win, Trump or Biden?
Jorgensen. That's the third candidate, a libertarian.
Well, he's not.
It's just she, and she's. No, she'll only get a few percent, I suppose. I'm not going to say Trump or Biden because most people, when they listen to this podcast, will probably have already heard the result, or a lot of the people will anyway, and then they'll just think I'm an idiot. Unless I got it right, in which case they think I'm a genius.
You're an idiot. No, because the polls are wrong, and they get paid to do it. Why would they think you're an idiot? You're a 50-50 chance. Go for it.
All right, okay. Biden. I think he's more likely to win, even when you take into account the silly polls and how wrong they are. I still think he's probably going to win. But I'm only like 60%, 60-40, 60% Biden, 40% Trump is my mind at the moment. I still think Trump's got a damn good chance of winning.
What do you not understand about one word?
I just look because as I say, I don't come down hard on one side or the other here.
I'm asking you to. Biden,
but I can't because I think it's very close.
I
think it's a very close race.
Regardless of how close it is, eventually, even though they're saying Trump would not admit he's lost, and he's going to claim early victory whether he has or not, eventually there'll be one winner. So just go for, I'm not asking you to see how close it is. Who will be there?
Biden is more likely to be Biden. Yes.
You can't just say one word.
No, because it sounds like I'm going, you Biden! It will be Biden, which I'm not saying.
You just did do that.
I'll edit marginally more likely to be Biden.
I'll edit the rest out and I'll just put, when I've asked that question, I'll say, Biden! Marvellous. Okay, well, speak you next week. Cheers, Glenn.
Okay, bye.
Done. Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5... Braveheart Investment Group, 62 pence, non-mover. At 4, Synergen, up 6.5% to 174.7. At 3, it's Amiga Diagnostics, it's a non-mover now, 75 pence. At 2, Evgen Pharma, up 0.25% to 10.13. And at 1, Remote Monitored Systems, at 6.74%, up at 4.75. Look at the chart of that, because that's tend to be rallying of late. Let's have a look here. Yes, wow, it's done is that a 5-10 bagger pretty much in the last few sessions since October, start of October. It's gone 0.5 from 0.5 to 4.7. Wow. Check it out. Top 5 most liked RNSs are as follows. At 5, it is Byzant Resources. Update on MMIH and Mankion. At 4, Argo Blockchain. Capital reduction update. At 3, Block Energy. Issue of equity and PDMR dealing. At 2, Bahamas Petroleum. operational update, Trinidad and Tobago and Suriname. And of course, I talked to Nathan about that in the podcast. And at 1, Amiga Diagnostics, Chinese approval for food detective test. And some people are enthusiastic about that. Seem to be more enthusiastic about that now than about the COVID testing it has. By the way, most read, Amiga's most read, Supply at Me Capital is second. UAE update, official launch of Shari's project. Amiga Holdings update on complaints. That's been most viewed. Anyway, that's it for the podcast. I'm just rabbiting on here, mumbling incoherently. That's it for the podcast. Thanks for listening. Muchos apreciados.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.